Does $5,000 gold seem preposterous to you? What about $100 silver? Could it happen? We hear all the time about debt crisis and high debt levels in the United States. But how does it all unfold in a potential debt crisis? And why does that make gold go up so high? And what signs do we have right now that we definitely could be heading in that direction? Hey, I don't have a crystal ball. You don't have crystal balls. But we can look at the facts and look at what's going on out there, try to put the pieces together, and when we do, the prospects for gold and silver price look very positive. Let's get started right now. Did you know the U.S. government has over $30 trillion in official debt? I bet you did. But what's even more concerning right now when it comes to the debt of the United States are two key factors. Number one, interest rates are going up and up and up. A lot of that debt is on a short-term basis, 2, 3, 5 years. So it has to be rolled over at these increasingly high rates. The amount of interest that is paid is astounding. But what's even more important and even more astounding is that foreign countries are dumping their U.S. Treasuries at an ever-increasing rate. As a matter of fact, in 2022 alone, Japan and China have sold over $250 billion worth of U.S. Treasuries. That's $250 billion being sold. And it's not just them. There's a whole big list you can look at. Countries everywhere are selling their U.S. Treasuries. I'm not going to bore you with the list. Just trust me. Everybody is dumping U.S. Treasuries. And a big key to consider is that this is happening at a time with extremely low liquidity in the market. What that means is that there just aren't a lot of buyers. There's not a lot of liquid money. There's not a lot of cash flowing around that wants to buy those treasuries. And we're going to talk about how this can result in $5,000 gold, heck, $5 million gold, whatever. But first, I wanted to say hello to Hans McHugh. He's a regular viewer of Ron's Basement. Hello, Hans. Everyone join me in saying hello, Hans. And I want to thank you for joining me today. You are important. You are the most important part of Ron's Basement. I honor you. I think about you when I walk down those steps. It's important to me that I get to connect with you from wherever you are in the world. Thank you. You can subscribe right here, turn on the bell, leave a comment, do whatever you like, but let's talk some more about this impending debt crisis. And one final note on why all the foreign countries are dumping their U.S. Treasuries. They're doing it simply because, as you've heard over and over, the U.S. dollar is so strong. They're using the money to defend their own currencies and fight inflation within their own countries. And aren't you sick and tired of that darn strong dollar? Not only is it causing problems for everybody else in the world, but it's causing problems for you and me, precious metals investors. Gold and silver have been swimming against a headwind, against the current of a strong dollar for almost the last year and a half. But that can easily change, because the bond market is very fragile right now, right? There's no buyers. So if an event were to occur where rates spiked, right, because we've got $30 trillion in debt, we've got all this debt that's on a short-term basis, constantly needing to be refinanced. If nobody's there to buy it and the rates go up, remember what happened in the United Kingdom just a few short weeks ago? What happens when rates on treasuries go up like 4 or 5%? The government can't function. The government can't pay. Nobody's buying them. Who do you think is going to step in and quote unquote save the day? Our old friend Jerome Powell, the United States Federal Reserve. And what do they have to do to save the bond market? Because that's the most important market in the United States. They'll have no choice but to print money and buy bonds. That's what the United Kingdom did. That's what the Fed's already done in the past. And that's what very, very likely they're going to have to do again. But when that happens, when they have to print that money, it's going to be a double whammy good thing for the price of gold and silver, because not only will they be further diluting the currency, but at that point, the herd, the market, the general consensus will realize that they have no longer the ability to have confidence. The Fed will lose the confidence of the market, and that will also help the precious metals because people won't believe that the Fed can really fight inflation anymore because the Fed would be fighting to save the bond market at that point. And I'm telling you, that would be like gunpowder. That'd be like eating a can of refried beans for gold and silver because the price would just explode. And even more important for you to consider, Mr. Silver and Gold investor, and I'm right there with you, is the fact that we need to look at what the foreign central banks are doing. Number one, they're selling their U.S. Treasuries, but what are they buying? They're buying gold at a record level. Don't look at what these guys say. Look at what they're doing. Actions speak louder than words. And when we can see them buying gold and silver, you got to realize or think, put the pieces together. Why would they be doing that? One thing we do know for sure, it's going to be interesting to watch all of this unfold. I'll be here with you through it all. When the debt crisis starts, right, and math doesn't lie, $30 trillion, all the interest rates, what's going on in the world, when it starts, it's going to be like letting a wild horse out of a stable, right? It's going to be hard to rein it back in. It could make for some very turbulent times. But we've been through turbulent times. We've gone through some choppy seas already together. We can continue. I'll be here for you through it all. As always, I greatly appreciate you joining me here in Ron's Basement. You're always welcome in Ron's Basement. It's me and you one-on-one, but we're part of a larger group. And until next time, you be well.